Okay, hello everyone, and welcome to this live intraday webinar on SB Trade Desk. Mike Boutros here this morning with you. Good to be with you. AV loud and clear. Petro, thanks for the heads up. Philippe, Mark, Permendra, Pooja. Great to see you guys all. Mark, Tiffany, good to see you this morning. So guys, we got about 30 seconds out of the housing starts and building permits from the United States. There's a lot to go over. Obviously, it's a huge week for data. So let's just jump right in. Okay, so again, about 10 seconds out, housing starts. We are looking for a print of negative 2.4% for the month of February. Previous print was -2. Survey says -17. Huge drawdown. Building permits also with a disappointment. Actually, building permits beat 3% versus 0.5. So a mixed print here. Going to take a quick look at the U.S. dollar and see what that's doing on the back of this release. Here's the Dow Jones FXCM dollar index. I'm bringing this to a 5-minute chart real quick and see if we're getting any reaction on this print. But again, big miss on the building permits, housing starts, topping estimates with a 3% read. So you're seeing the dollar come off a little bit. I'm not sure we're going to get a play on this 8:30 print, guys. Remember, it's a huge week for data with all the focus really on the Fed meeting, which starts today into tomorrow. The biggest change that we're looking for the Fed meeting, obviously, the removal of that patience language with regards to rates. And we're definitely going to see the projections is going to be the major thing, not so much as it pertains to employment, but specifically as it pertains to the inflationary picture. And if they do soften their inflation expectations, guys, that's going to push out interest rate expectations. And certainly that could definitely dent to the rally that we're seeing in the dollar here as we continue to trade laterally this week. So we'll come back to the index. Obviously, nothing has changed on this from yesterday's webinar on Daily FX. I hope some of you enjoyed that webinar yesterday. We went into quite some detail on strategy, and we answered a lot of great questions. So give the guys outside of SB a little bit of taste of what we do here every day. But let's jump right into the featured scalps on the intraday page that we've been following. Eileen says yesterday's webinar was great. Cheers, Eileen. It was good to see you there. Again, guys, public webinars are just on Monday on Daily FX. Obviously, all of you are welcome there. And then all the rest of the webinars will be here. I did want to take a quick poll here in the room, guys. Did you prefer for tomorrow's webinar? Did you want to do an 8:30 webinar? Take a little poll here, or we can actually open it for the FOMC and cover that live. If you guys want to give me a little feedback on that, we'll make a decision on that today and post it. All right, so let's jump into the trades. Sterling Oz was the first thing I highlighted here on yesterday's update. Jay Jackson wants to do FOMC. Okay, yeah, keep your votes coming, guys. Just give me a quick heads up, and we'll take the consensus here. I'm on client meetings by 4, but I can listen to the recording later. Says Eileen, Jay, Petro are all voting for the FOMC. Okay, guys, I'll post it up on the homepage. A quick reminder, some housekeeping as well. You'll notice that this week's intra-week or mid-week strategy webinar with Jamie, that's going to get pushed back till Thursday. We're going to leave Wednesday open for FOMC, let the dust settle, and then the mid-week strategy webinar will take place on Thursday at 1 p.m. FOMC seems to be the consensus. So, guys, we'll go ahead and do that tomorrow, and Pooja's in on that as well. All right. Gotcha. Loud and clear, guys. It's your service. We're here to provide. So, Sterling Oz, I keep saying that. Here's what we're looking at on the daily. Listen, beautiful plays on the Sterling crosses. And, it's weird because a lot of people are asking, well, why are we focused on these Sterling crosses when the dollar is the main event this week? It's important to know when we want to shift our attention, guys. Yes, the dollar is going to be the biggest player this week. Yes, we're probably going to see a surge in volatility, but not till the release. And trading into a release like FOMC for me just hasn't been a fruitful experience. So the Sterling crosses are clear as day. I think you have a really, really clean setup. The daily charts are getting a little murky, but the key levels are holding like a charm. Bring your attention to 94.57 here. 94.57, guys, no random level. It is the low day close that we made right here on the 6th. That was the highlighted resistance. You also had to deal with this median line, which we've been bouncing all around. So an overnight trade, as we noted, into 94.50, 94.60. We were looking for short exposure here on the Sterling Oz. Specifically, the 38.2 of the decline came in at 94.80. We didn't quite make it that high. We missed it by about 13 pips. But the trigger that we highlighted yesterday was clear as day. And for that, I was talking with some guys here in the morning earlier. Petro and Puja also had some beautiful plays on sterling yen we'll talk about. But they keep panning out in Europe, guys. And, you know, I'm going to have to switch the schedule here because these plays have been very, very nice. So yesterday we noted, you know, coming into 94.80, 94.90, you have some resistance there. We were looking for the support trigger to give out in momentum. A really nice support trigger there. This is what you're looking at right here. You failed above that median line. The support trigger gave out. You needed to be careful heading into 93.80 here. This was the near-term bullish invalidation level that we noted last night, right? So once that gave out, that gave you the clear open. You're holding those trades, stops at break even once that breaks, and now you're settling down here just ahead of the weekly opening range. So we always want to remember, guys, even when we're playing a clear trigger break or a session opening range, you have to clear the weekly setup, and the weekly setup lows are still in place. So, excuse me, at this point you should be out of short exposure or at least covered half of the trade. 55 pips is a quarter of daily TR. Stop should be at break even. Near-term resistance, same exact region. Okay? This is pretty critical as long as the support structure is concerned. Remember, 92 into 91.80 is really a big level. You got the high day closes for December. You got a 50% retracement of the 2015 range. You got a 1618 extension off the high. And this is obviously that longer day at 38.2. So leave some room down here if we do see that break continue. But, you know, the setup is very clear. Now, guys, this deep in the setup, you have a very clear weekly opening range. Okay? So the fact that the daily chart at this point is putting out an outside day reversal is something you want to give credence to, meaning all the more validation of this being your near-term bearish invalidation level. So, you know, you see a Aussie sell-off or a sterling rally pop through 95, you know, we're off the short side. You look for a rally towards 96.30, towards 97. That being said, the weekly opening range is pretty clear-cut and set here. Philippe with a question here says, I have a question about the setup you're talking about, sterling Aus. It triggered when I was sleeping, so I was wondering, do you ever set market orders in your strategy, or do you always take trades live? Of course, I understand risk of the former. Sure. Philippe, I'm personally, if you're asking me, Michael Boutros, I'm personally not a fan of scalping with market orders, just because I feel like, and again, this just, you know, this just might be me, but you kind of got to finesse the market, and the triggers are really what put us into the position. So I'm not a person who's going to be, you know, it's not a swing setup. It's a very different style of trading, guys. You know, I look for the validation in near-term momentum to get me into the position. So it's very hard to place orders, Philippe, ahead of time. Does that answer your question? I'm just being completely blunt with you on this one. It's just my personal style to be more. Now, once we get into the position, Philippe, that's a whole different ballgame. Once you're in, obviously monitoring the trade is, you know, a moot point at that point. You have your stops, you have your limits. On holding trades and bringing stops to break even, obviously that's something you need to be around for, but on the entries, rarely will I put entry orders. Philippe says, yes, absolutely. I thought so, but I wanted to confirm with you. Yep. Anytime, man. Feel free. So are there any questions on the sterling Aus? We'll see if the U.S. opening range gives us a crack. Remember, 91.85 into 92 is absolutely paramount. If that thing gives out, sayonara. You know, you're basically looking for 90, 89, 84 here. Would be a perfect 618 of the 2015 range. Okay. And again, you know where the bearish invalidation level gives out, guys. If that does break, expect a rally back into the February trend line. And that can go as high as 97. Remember, it's a wide range scalp. You're putting 218 pips a day on this one. So we want to keep that in mind. All right. Next up on the docket is sterling yen. I think a lot more of you were involved in this one. Obviously, swing trades killed this last week. It's still in play, guys. It's still in play. You know, we're looking on the swing side for a little bit more of a rally higher up to get back on the short side, but near term, there was a beautiful play here last night. Here's what the scalp looked like. By the way, I did set up this for you. I just want to show you what this looks like, guys. As far as the sterling Aus, there was a beautiful 5-minute trigger I wanted to show you at the highs here when this broke. Okay, so remember the 30-minute triggers are there for validation. When you're in the position and the 30-minute candle closes, that gives you conviction to either hold the trade or reduce your exposure. But the trigger for the actual scalp comes on the 5-minute. And for the sterling Oz, it was pretty clear. Okay, and it happened obviously in European trade. And this is the operative trigger I would have been looking at. Why? Divergence into the high. Equal highs in momentum with an extreme in price is divergence. Remember that. Doesn't necessarily need to be a high or low. Even if the RSI signature maxes out at the same highs and price action makes an extreme, that's divergence. Remember, you're just looking for the oscillator to not confirm an extreme in price, and that's exactly what happened. So this wasn't the trigger. This was still the trigger, but on the back of a divergence signal, 9 times out of 10 will take. And in fact, on the trigger break, you had a very good risk reward here, 94.30. On the stretch, 94.60. It's a 30 pip stop or so. You're looking for 55 pips. As you get into this support region, it is critical and it is the bullish invalidation level, so maybe you clean it up, but you're already 50 pips up, right? And then on the continuation break, now you're just taking a little bit off, bringing your stops down to the last swing high, and you could have played this for a nice 80, 90 pip drop here. Okay, so even the 5-minute trigger panned out beautifully, guys. And let's say you missed the break. Use the trigger still. Held 40. You might have gotten concerned. Oh, Mike says 40 here. That's probably still not turning around. But on the rebound, again, failure to break through that former trigger of support. Subsequent breaks of 40 keeps the downside in bias. And all that happened before you even cleared the near-term bullish invalidation level. So there's ample time to jump into this position. Yes, if you waited to the outside of the belly here when you got out, it's now stretching your ATO, it's stretching your risk to reward. Yeah, you know, these ones, guys, I'm never going to advocate that you chase, but, you know, the markets on a pair like this where you're putting 55 pips, you know, you have to be a little bit more aggressive, I guess. But if the risk reward just doesn't match, you got to sit out the rest, and we'll look for a reset on this one. But beautiful trigger in overnight on some divergence. Beautiful trigger. Stefan saying sterling yen hovered just shy of 180.25 resistance for 3 hours yesterday afternoon. Is that a good sign of a reversal, meaning the long period of time at resistance? Yeah, Stefan. The longer you test the region of resistance or support, the more critical it becomes, and the more the reaction off that level becomes significant. Stefan, does that make sense? So absolutely, that's a great point. Let's jump into that. Let's jump back into sterling yen. So that was sterling Oz. I just wanted to show you that trigger. It was pretty cool and played out really well last night. Let's jump into the meaty guy, sterling yen here. So on the daily chart, just to highlight where we are in the grand scheme of things, the whole point, if you guys looked on Friday's update for sterling yen, I actually left it up here because we wanted to say the pair is vulnerable for a near-term recovery higher while above this zone to open up next week. And that was when we were coming right into 78.30, 78.11. And that region is highlighted here on the daily chart as well. Okay, you have the S1 monthly pivot. You have the high close for September. More importantly, the low day close right here. Okay, so the low day that we made for 2015 came on February 3rd. The close of that reversal candle, which was an outside key reversal, meaning it's the lowest low that you made in the last month, and it was an outside reversal. Well, actually, it wasn't a reversal, but it was an outside candle. The close of that session right there at 78.26. So we came into that to end last week, and we start this week with a possible rebound. Now, what does that mean for the scalp? Well, it was a perfect play off that key support. Okay, let me just zoom this out for you as well. So if we take the slope lines that we've been working off from the February highs, you mirror that slope sliding parallel to the low that you made there on February 15th, I guess that was the 16th, came into support region just above the 1618 extension and the double top objective, or the measured objective rather, on that rally. So if you take 100% extension of that equal leg and measure that down, that was exactly 78.30. I know the swing side was looking for that exact level, and here's the rebound. So the break of the European opening range yesterday, we talked about this in the webinar, gave us a topside bias. It was fizzling out as you opened up U.S. trade, but another test of that support, former resistance, gave us the upside thrust. Overnight trade, you're absolutely right here, Stefan. This thing sat here just below the 50% retracement literally for the entire almost Asia session. Now let me ask you, let me tell you this, Stefan, why this is even more critical to me. Aside from it just holding below resistance, it made for a ridiculously tight and easily ascertainable break of the Asia opening range. Here's your Asia open right here. Asia open low, well, that doesn't matter. It's right above 79.80. That's the 236 level we're watching. The Asia open high, well, that happened a couple of hours in at 180. Really tight range. So heading into Europe, into the start of European trade, you already have a very well ascertainable opening range for the session. You're just waiting for the break. Break of the lows, stop against the highs, and vice versa. Okay? You had a basic trend line here. Again, we don't stress these things, but when they confluence with the level we're looking at, why the hell not? Okay? The trigger here, which is a little messy, didn't really give you the biggest heads up, but on the 5-minute, again, just beautiful triggers, guys. Look at that. Look at that opening range for Asia and Europe. Let's bring up the trade sessions indicator. Give yourself some clarity. Okay? Look at the blue lines. That's Sydney. Look at the dark blue. That's Tokyo. That's the best opening range play you're going to get. That's a textbook, right? Really tight stop. You're looking for 40 pips. Break of the range. You're looking lower. So another sterling cross, which just continues to impress us here. So at this point, what are we looking at moving forward? We don't want to talk about what happened. We want to talk about what's going to happen. And right now, you're testing the weekly opening range low, 78.75. So session opening ranges, weekly opening ranges, both of them playing out to the T on both sterling crosses. A break below this, you're looking for that pullback into 78.30, 78.12 again, or 11 here. And then again, on the daily chart, that's such a big level, guys, that if it breaks, you're looking for initial targets at 77.80, which is the basic 200-day moving average, soft target, and then obviously this major key support down here. Remember the video that Jamie put out this weekend, guys, some exquisite stuff on there as far as seasonality for the sterling and yen crosses heading into this week. So certainly, you know, a pull into a new low here, it might not be outside the realm of possibility. Obviously, near-term bearish invalidation, very simple, is going to be a break above that 180.20, 180.30 level to the upside. Okay, keep your eye on that structure that we're in too. So this is the pitchfork. Sliding parallel here gave us a really nice rebound, consolidation, instant resistance. This is still the level that would need to be cleared for us to get back on the bullish side for sterling yen. Obviously, again, swing trades are looking for a possible entry up at 182.75. That's going to be a big level if we do break this 180.80. You're basically looking for that entry on the swing trades. Questions on sterling yen? Stefan says, cool, I was right in there. I nailed it. I'm assuming you're talking about the sterling yen. Good job, Stefan. Pooja says, hey, Michael, nice one, sterling yen. I had to wait for the European opening range to break, but it was worth it for 70 pips. That's awesome. Actually, that was Petro, sorry. Pooja says, AM, having a really great morning. Thanks to you and Jamie sitting on a sterling yen short from 179.80. Beautiful. Booked half already. Very, very nice. So the only thing I'm going to tell you on that one, Pooja, is just watch the weekly opening range here. It's literally to the pip at 78.75, 178.74. If that turns out to be the U.S. opening range, Pooja, and it breaks, I think you got a nice drop into 78.30. If the U.S. opening range takes us back above 79.20, I would start to want to, or 79.30, this range, I probably want to start cleaning that up just a little bit. Beautiful trade, well done, and good foresight on the hold there, Pooja. Okay, there's this operative resistance trigger we'll be looking for if we do get that topside pop. My stops are at 79.20 right now. All right, cool. Okay, cool. That's enough room, I would say, yeah. pretty much just against this low, which is just below 79.20, and against this high. Not bad. Not a bad region. Well done, Pooja. All right, Petro saying, let's say you're already involved in a sterling yen. Are you willing to take another position on sterling Oz? Petro, I'm of the mindset of I typically will take every trade on its own merits. It is true that you do not want to put all your eggs in one basket. So if you have excessive sterling short exposure out there, I'm not typically going to be on board of really loading up on a sterling short. But that being said, Petro, on a scalp basis, I don't have necessarily a problem with taking another position. Listen, every trade is on its merits. If the scalp is there, the trigger is there. You know, I'm not going to ignore it just because necessarily I have another sterling position open. Petro, this is where you want to be more mindful of your leverage. So maybe you do take the position, but you lighten up on the leverage a little bit because you have sterling exposure. Maybe if you're looking at both of them, the one with the larger ATR, you play a little bit lighter on the leverage because you do have a bigger range. Do you know what I mean? I might adjust the leverage of the trade size more, but I won't necessarily completely steer away from it. If the setup is there, it's you know, I take it on its own merits. So I hope that answered your question, Petro. Good one. Yeah, you don't want to excessively line up on any one side of trade, but you know, if the setup is there, it's there. Cool? All right. So the other thing I wanted to look at, Petro saying, yes, I wanted to play the sterling dollar 2 this morning. So guys, I did take the sterling off the intraday page. Obviously, you can always go to the scalp log to see that setup from last week, but I kind of don't want to trade the dollar until we get through FOMC. And here's the thing, you know, the euro actually looks pretty good and the Aussie looks pretty good. The only dollar cross I'm interested in is the Kiwi. So let me go over that real quick, Petro. I promise I'll come right back to the sterling, but the Kiwi setup, and I, you know, kind of talked about this last night in the setup. By the way, I hope you guys are enjoying the late updates. You know, I've been looking back at all the scalps, and 95% of them, you know, 90% of them are playing out in Europe, early Asia. So the later the update from my end, I think the closer to the price action that you're getting. So I hope you guys are enjoying that. They're late nights for me, but I think that's going to be your best timing update for the scalps. So keep an open line of communication with me on that. Let me know how that's going. Eileen says, yes, late updates are great. Me too. I need to change my schedule. Petro says, yes, keep them coming. Eileen says, day jobs. Mark, I appreciate that as well. Okay, guys. That's good to hear. I appreciate your feedback very much. So, the Kiwi. Listen, very rarely do we get technical plays in this kind of market that are quite as clean as the Kiwi dollar. And I'm the first person to tell you that the daily chart on this looks pretty ugly, and I'm not a big fan of it. I'm the first person to tell you if it's a dirty daily chart or if it's a messy daily chart, I probably won't even touch it. But the intraday structure on this is, you know, you can't make this stuff up. So here's what we're looking at on the daily, just to touch base on it real quick. I don't want to stress this. The only formation I really want you looking at is this right now. So the range is huge. 73.37, 73.40 is still a big range for me, okay? We've been sailing through it on a daily structure for the last couple of days, but it's still pretty big, so I have it on here. It is a 618 extension off the highs from 2014. It is a 38.2 long-dated extension, and it kind of splits price action so far these last couple of weeks. Look, it's all about this chart right here, guys. That's all I need to look at for Kiwi dollar, and I think although the dollar crosses are probably going to get kind of messy here as we get into the FOMC, this is the structure we're looking at. Again, not to bore you, the key range of the sliding parallel that we've been watching for literally almost 3 months now. The focus heading into this week was the pullback that we saw on Friday. Again, we noted on Friday that we're looking higher heading into this week for the Kiwi dollar. Looking for a possible rebound heading early into next week. There it was. You got a clear break. We talked about this in the webinar too yesterday. You got a clear break of the Asia Pac opening range last night, or excuse me, on the Sunday open. Popped right back above 73.30, which again is that major key level we just talked about. Gave you an upside bias. Initially, you're looking for the median line. A break above this, you're looking for that key level at 74.40, 74.50. Okay. As you're coming into these highs, momentum doesn't look like it wants to really hold 50. We're still holding above, doesn't really want to break 60 rather, still holding above 40. So you want to curb your appetite here. But the premise of the trade is this: as long as we're above this same median line range, you look for a pullback into here, possible longs, and the bullish invalidation all at 73. Okay, so if you get a pullback into this region, we'll be looking for long triggers. We'll be looking for a possible break or an opening range break below 73. That would open up the short side again, 72.60, right back into 72. This might not give us many plays until FOMC, but if it does clear the highs or it clears the median line here, which has been very, very solid, you look for that rally into 74.40. So to be clear, the only play here, guys, that actually played out this week so far was the long. Nothing an overnight trade. You actually did get a trigger here, but it fizzled out. Maybe barely, maybe scratched up 20 pips, but it's a contractionary range. And this is the reason that none of the dollar crosses are highlighted on the intraday charts today into FOMC. We're going to let those simmer for a little bit, guys. Let the fireworks play out. It's going to play out. There's a lot of expectations, and the more chatter you hear in the news, the more chatter you hear on the Bloomberg and CNBC, all that junk, the more noise you hear, guys, just makes it for a more volatile release. It's not NFPs where you get the number, market reacts. It's going to be projections on inflation, employment, growth. Then you got the presser. We're going to go through her questions. She's going to get pressed hard on timing for the interest rate hikes, especially the fact that unemployment continues to downtick. Nominal or the natural quote-unquote rate of unemployment by the Fed is debated between 5.3 and 5.5%. We're there. So the only thing they're waiting on is inflation, which is why everyone's going to be really listening to her comments on inflation and the quarterly projections on where the committee sees inflation in 6 months to a year. So enough about that. Enough fundy noise for today. Watch support at 73.30. We'll be looking for a momentum something here, either a break below 40, which would be the first for the week, and then move below 73.30, or a break of, if we turn out to have a U.S. opening range high that takes us through this median line, that might be a beautiful play from 74 into 74.40, 74.50. Okay, remember this is now the opening range high for the week as well. Okay. Oh, dairy auction today as well. Pooja, thanks for that, for the kiwi. Sure, right on. Yeah, absolutely. So look for that. That oftentimes will trigger some volatility as well. Chintan says, that's cool, buddy. Right on time each time. Many thanks for those timely updates. You're more than welcome, Chintan. I appreciate your comments, man. All right, so keep your eyes on this structure for the kiwi. I think, if this holds and you get a rebound in 73 and then the dollar sells off, that might be a beautiful entry. Again, the break below 73, we'll use that as our near-term bullish invalidation level. And stop traffic. There's actually a trigger right. Okay, let's not extend it to that low. Let's use the low in price here. We'll work with that for now. So that is Kiwi Dollar. We'll see if Yellen has some fireworks for us there. Last thing I wanted to update, this is not necessarily an intraday trade, guys, but will be in super focus as we get into the FOMC. I think you're going to see some fireworks here in gold very soon, guys. Again, don't take my word for it. It's just what we've been doing in price action. If this thing clears 150 on a closed basis on the pop to the bottom here, 1137, okay, and then right into 1130s. There's nothing in between. 1137, I've been showing you this chart for weeks, is going to be the 100% extension from that decline off the swing high you made in 2013. 1137, and also just pips away from the stretch low that you made last year. And that stretch low actually comes into $11.30. Okay, so a little bit even lower than that. This is a weekly chart, by the way. So looking at these two sort of side by side, the major emphasis heading into the close of last week and the open of this week, as we noted on intraday, is 1150, 1170, this region here. Okay, a topside break above this, you've got that former median line resistance, has been pivot, pivot, resistance, resistance, break, almost support, resistance on the way up. This is the only thing that'll be the bearish invalidation level. A topside pop for that, you look for a rally into 1185. 1185 is not a random level. It's going to be the confluence right now of the trendline resistance from January, but also on a relative basis. And the reason I don't want this on there is because it's kind of messy, but it's just a basic 236 retracement. Okay, so you got to know your targets. If we top 1180, a nice $15 run there should be pretty simple for gold on a recovery. On a downside break, like I said, 1137 is going to be your first target. That's actually going to be very close to the close lows that you made there, or that stretch low, and that 100% extension we just looked at on the weekly chart. And then obviously you have a confluence here of 50% extension and the stretch lows. That takes you right into 1130. So huge week for gold, huge week for gold, and especially on the back of where the dollar index is trading and the resistance, you know, it could be a beautiful play. I would caution you on scalping this intraday for those of you who are interested, or if you're trading on the futures market, or if you're offshore trading CFDs. I just caution you because there's going to be a lot of back and forth. There's going to be a lot of back and forth for the same reasons we talked about earlier. And guys, I don't want to keep going into the fundies, but it's very important to keep in mind what you're trading. Gold, historically speaking, you know, the two major fundamental factors are risk on, risk off, and inflationary hedges. Okay, and if the inflation picture turns out to be softer than expected, and interest rate expectations get pushed out, that's a double positive for gold. Hear me on this. Okay, if they start to say inflation is weak, it's going to be a little bit softer, projections are lowered. Okay, that means they're essentially pushing out their expectations. Gold could catch a bid easy. If they come out and say status quo, we're looking for a possible September hike, inflation is just transitory, by the way, we're breaking right now. If in that kind of scenario, gold is going to get washed out so quick, guys, we'll be at 1130 before you know it. Okay, so really, the implications are very, very big for what Yellen does on tomorrow for gold. All right. We'll see if if we close below it, we'll count it as a break, but I'm not going to be faked out by these spikes, guys, ahead of the FOMC. So I'm going to take a more reserved approach. I left that on the intraday trade because I do think once we do clear this level on a closed basis, you get the conviction bias heading into the end of the week. That being said, we'll have to see what today's close looks like. Angelo, great to see you in the room, says, levels for oil, everyone is calling for a drop, which is when I tend to look the other way. Not a bad idea. Wish I had SSI to confirm. Looking to go long at the slightly lower levels with a stop just below the recent lows. Thinking if that drops, I'll get out quick. Thanks. Yeah, so there's no SSI on. I do have access to SSI, obviously, guys. If you have any SSI questions, we can always bring that up. That's not an issue. But I just want to let you know. Angelo, I just get caution. I want to caution you in trying to call the low. You know, if you're trying to scalp it, my man, he says I'll get out if it breaks. I guess that's one way to play it. But you know, if the dollar surges, guys, it's going to be pretty heavy for any of the commodities to mount some sort of rebound here. So I don't know. I don't know, Angelo. I don't know. It's all going to depend on what Yellen says. You know, these days, if she sneezes wrong, people count that as like an interest rate hike or something. So we'll see. We'll see what that has to offer. But let's look at crude. Why not? Ask and you shall receive, guys. Whatever you guys want to look at. Here's. I haven't updated the chart, but we can always do it together right now. Have to do through that 618. All right, so 42.20 into 43, which is actual stretch low that we made for January. Yeah, and that trend line. Is that trend line there? Let's see. Okay, so if you see the trend line extending off the 1998 low, 1999 lows here, and then tagged again in 2001, that trend line was a really nice pivot heading into the start of the month, and what I interpreted as the opening range low. So here's your March open, and the trend line was right basically at where we opened the month. Okay, a basic off the low broke, and then once we cleared 48, that's the downside bias. I don't have scalp targets for you per se on this one, Angelo, but I'm just going to say this. If it does break, I have 40 as a highlighted region of support based on, I think it was the, oh, here it is. It's the 2003 highs pivot with the 2004 lows. I think it was actually a low day close or something here. Hold on. No, it wasn't. Week. Maybe that was it. The low close for 2008. The low week close for 2008. That's a soft target at 40.50. Just choke it up a little bit if you see 42 break. But listen, I mean, this is not my area of expertise, Angelo. I'm working out the levels here as we go for you. I'm just going to tell you this. You know, on a stretch decline here when you're heading into fresh yearly lows, I don't really take a scalp mentality on it. This is sort of more of a swing trade type of medium-term position where you break the opening range, you just look for the new yearly low, and then you kind of close it out. I don't want to call the turn on this per se. I am with you 100%. If we do see a dollar pullback, this is probably a beautiful level to take a long off of, especially with all those headlines out there. I'm with you 100% on that. Am I willing to front run that with a market order at 42.20 or just an entry order down there? Probably not. I really want to caution you, you know, Yellen can do some damage on both ends here tomorrow. Okay? Angel says, Mike, just want to let you know I never turn around news or trade around news, so I'll be out by the time Yellen speaks. Hate the movement around news. Angel, it's probably a prudent move, man. It's a certain style of trader that really wants to benefit from those. I don't always trade the news, guys, to be honest with you. The news for me is a catalyst to give me clarity on the setups I've been looking at. Very rarely will I actually jump into a position post-news. Typically, if I'm holding a position into the news, is the best way to play it. Where you're already in the position, you're bringing your stops to break even, you're kind of just already navigating around a core position is the best way to play the news, in my personal humble opinion, because the stops will blow out pretty quick if it goes against you, and if it doesn't, your entry is not chased already. Your entry is already validated against a stop and a proper risk to reward. So there's a lot of different ways you can play it, but I don't blame you, Philippe. I don't blame you. It's not for everyone, man. Philippe says, or Angelo, Philippe says, Michael, how do you have so many symbols in Market Scope? It always lets me do 20 at a time. Guys, if you call your rep on FXCM, you can actually request to have more currencies added to your subscription list. It's not unlimited, Philippe. I think I can get more than 20, but it's not unlimited. So there is going to be a limit, but definitely go ahead and call your reps. It's just a quick switch they got to do on their end and allows you to have, you know, more subscriptions on your Market Scope. So hope that helps. Aussie dollar level, please, if possible, says Premendra, coming right up. Philippe says, I see, thanks, more than welcome. Okay. Aussie dollar. Where art thou, Aussie dollar? Okay. Again, a trade like the Kiwi, where the daily chart's not really I'm not fancying it. The main reason I don't have this on the intraday page, I think this is going to be a beautiful play heading into another one that could be really, really nice heading into Yellen. But ahead of it, I just don't know what to do with it, guys. I like the long side near term. We talked about this in yesterday's webinar. I think you put in a very clean weekly opening range. So I'm not going to stress the daily here, guys. The only thing I do want to show you is just the median line I'm looking at here. That's kind of the resistance level that maxes out with last week's high. And right now that comes in around 77.30 or so. What else do I want to say on this? Well, let me just jump into the scalp chart. Here's what it looks like on the 30-minute. Okay, so the structure that Jamie highlighted over the weekend as the new structure for the Aussie long here looks pretty good. A sliding parallel kind of catches those lows that we made here, and this is the highlighted region we'll be focused on getting deeper into the week. Now, important, 76.10, exact opening range low for Sunday, the exact low that we made last night. That's your near-term bullish invalidation level, 76 into 75.97, 76.10. Okay, we'll call it a 13-pip range there. So if we break below this, sayonara, look for 75.60, look for the continuation into that major trend line that caught all those lows last week. On a topside break, let's say if the U.S. opening range breaks above 76.60, look for that rally into 77, guys. That's basically the target, 76.95. Just ahead of that, and this is where the setup is a little messy. Remember this old formation, guys? I didn't want to get rid of it because the slope lines are still giving us nice bounces, i.e. this median line, support, pivot, instant resistance, pivot break, resistance, right? Even the lower median line parallel, support, a little messy, resistance, and then you have the current operative one. So it's kind of messy here on the intraday, but the confines of what this formation is doing in combination with a very clear opening range for the week now is what I'm looking at. So 76.10 on support. You're basically looking at 76.60 as resistance. We'll look for a break of that, favoring the upside while above the 76 handle. Okay. Again, note that momentum is holding 60, so you don't have the conviction upside until the opening range breaks. Momentum is holding 40, so you don't have the conviction downside until 76.10 breaks. In the meantime, you're playing triggers within this range. So I'm of the mindset that you probably get some sort of near-term Aussie recovery here. Again, it's just difficult to be short the dollar, guys. This is the reason that most of our intraday trades have been in the crosses. You're not at necessarily resistance. You're not necessarily at support, which we gauged as 12,050. We talked about that yesterday. So the dollar, it's just not on my menu right now. Philippe says, I have a question about the Aussie Kiwi. Does it look like the Aussie is slowly catching up and seems to be slightly stronger than Kiwi? So Aussie Kiwi is an interesting setup. Here's what the opening range for the week looks like. I actually haven't even looked at this week, but I know in the back of the daily charts we were looking at last week. Here's what Aussie Kiwi looks like on the daily. It's playing this pitchfork formation like it's nobody's business. Do you guys see this? Catching the lows, ride those lows for a while, break, ride the median line for a while. Here we are, median line touch, still a support. With all the divergence that you're putting in the lows, this thing still can't turn around. It's tough. It's very clear opening range for the month, 105.20, 102.80, rather large, but it's there. It could be a great trade. I just don't have the trigger yet, Philip. I don't have the trigger yet. I would love for this trigger to break. We'll play the upside reversal. It will play towards the R1, 106, and then into 106.70. A downside break of the support structure. You'd still want to be careful heading into 102.80, but it's a broader downtrend. I don't think anyone's going to argue that. So we could be putting in a bottoming process, but guys, these things take time, take multiple attempts, and when you're trying to trade a turn like this, a scalp approach might not be the best way to play it. Barring obviously clear intraday targets and clear intraday signals. Let's update this real quick. Premendra says, thank you, sir, for the levels on Aussie Dollar. We'll keep that. We'll keep this after FOMC. Yeah, Premendra, anytime. And guys, we'll give you an update tomorrow for sure. We'll be covering that live during TAP, so we'll have these levels in front of you. For those of you who are new to the room, as always, please remember that you can always take a picture of any of the charts that you see here in the webinars by clicking on the camera in the upper right-hand corner of your screen there. So forgive me for the silence. I'm just throwing some levels here together for Philippe. I'm actually interested to see how this pans out right now on this Aussie key trade. Okay, don't give any credence to that right now. I'm just going to leave that there because I want to see if that offers some support right near term. But just bear with me, guys. A couple more minutes. See what we can do here. Yeah, nothing really here to turn me on this, to be honest with you, Philippe. Nothing to get me excited about. If anything, I would be looking for a clear definitive divergence in what we're seeing in Aussie dollar and Kiwi dollar in and of themselves, like you were saying earlier, to get the conviction to try to play the reversal. Look, it does look like we're making some sort of wide bottoming process, but the ATR is pretty tight, man. You're only looking at like 80 pips on a daily basis. A 20 pip scalp for me to try to squeeze clarity out of this, it's just not warranted. I think you better get a better deal. If you're really hellbound on trading the Aussie, the Sterling Auss is still perfectly in play. I'd rather shoot that one at 200 ATR than try to squeeze out 20 out of this one. I think this, for the sake of clarity, you kind of let it simmer, man. I just don't have a setup per se that I would play. The only thing I would tell you is this. Let me just take one step back. If you get a break above 104.25, that clears the weekly opening range and sort of dissuades us from validating this as sort of a break of the median line and test of resistance. So this topside slope into 105, I'd be willing to play. I mean, that's just a clear objective Philip break of the weekly opening range, right? Irrespective of what I think. Other than that, you know, I'm not really sure. I'm looking to play the short side of this. So sorry not to be as conviction of a bias on it, but that's kind of where I stand on Aussie Key. Philip, does that make sense, man? He says, sure, it sounds reasonable. Thanks. You're more than welcome. Petro says Kiwi dollar hold at the 50 in 30-minute RSI and what looks to be a break of New York opening range. Kiwi dollar, Kiwi dollar, Kiwi dollar. Where are you? Kiwi. Okay, so the U.S. opening range, just for Petro, remember, could stretch into the 8 to 9:30 slot is really what I typically will look at. So I want to be cautious ahead of the open because sometimes you'll put the low 9:30 markets, cash markets open, then that's the range. So I don't want to take a break of necessarily just the first 45 minutes of the opening range. That being said, your downside target here is 73.34, 73.30, 25 pips. Stop against the highs. Yeah, that could work. Let's see if the 5-minute trigger gets in. It's too tight. It's too tight for me. It's too tight for me. I mean, it probably will see 73.30, 73.35 here, the same key support, but I don't know if I can justify that that kind of entry at this point. Not yet. If it was a more compelling 3-touch trigger here, probably would have got in. but I think at this point we're gonna be chasing. Petra says, got it. Thank you. You're more than welcome, man. Nice eye though. Nice eye. Again, guys, it's worth it to pick and choose the scalps. These are the 5-minute triggers that you want to work with, okay? These are the sort of triggers you want to work with. Multi-touch triggers that have been in span for a couple of hours. Again, sterling yen, like I showed you that one. That's another. That was another 5-minute trigger that really panned out real well. So it's worth it to pick and choose. We have enough setups on the table where there's no need to kind of try to chase the market on the open. I'm gonna wait for these triggers to pan out. So Petra, hope that offers some clarity on that. Okay, more questions. Got a couple more minutes, guys. Let me know what you want to look at. It says, got it, thank you. Flute says, it doesn't have to be your last question, man. Could you show me what your resistance levels are for Euro Yen? I can't even tell you the last time I checked out Euro Yen. Let's check it out. Yeah. So the yen, I mean, the euro crosses in general, it's just not something that's on the menu for me from a scalp perspective. That's kind of a buy and wait, buy and hold. The ATRs are tight, and it's a one-direction trade. Now, the rebound that you're seeing, let me take a step back here real quick, Philip. I promise I'll come back to the euro dollar, just to put things in perspective. Yeah, you came into a support line that we've been looking at, which is kind of just a mirror of the slope off the lows that you made. Both in 2009 and then again here in 2010. Just that perfectly there. Almost caught this to the pip here on the pullback, and you're seeing a little bit of a rebound here. The thing I've been looking at, and I think this is what we talked about in the scalp webinar yesterday, is a 30 break in momentum coinciding with a break of the weekly opening range would shift the near-term bias to the upside. Again, this is going to be a low conviction scalp because you're trading against the trend, so half leverage, quarter leverage maybe, especially heading into FOMC, okay? But on the 30-minute, it looks like this, okay? You're right now just basically testing, and that's the same exact level, guys. If you were in the webinar yesterday, same exact level we talked about, 106.40. It's just a basic 236. All you can do with this, guys, is use near-term metrics. That's it. Anyone who's calling for a reversal into 111 or 112 right now is, you know, I'm trying to go against the trend type trade. Doesn't always work, guys. Not when you're intraday trading or even near-term trading, okay? If you're trying to put a stop on this, maybe below 103 and you're trying to play the rebound, sure. Other than that, nimble is the name of the game. And right now, near-term resistance 106.30, a topside break. You have clear rain into 107, 107.50. Now, keep in mind that the daily ATR is a little bit wider here than what you're seeing on most of the other euro crosses. Obviously, the precipitous drop that we've been seeing has a lot to do with that. But a quarter of daily TR, you should be looking about 27, 30 pips per scalp on this one. So on a breach above 106.40, you know, the targets are far. 107 is just a psychological barrier I would be looking at, and 107.50 is the real next topside target. That's a confluence of a 38.2, and then this is a 1618 extension, a little bit longer dated. Or 2618 extension at 107.58. That's off the highs from February. So the levels are here for you guys. I don't, you know, I'm not. This is not for me a conviction scalp. You have a soft target at 105.50. That's not only the opening range low for Europe, but a nice pivot in price here since the start of the week. So the levels are there, but it's at near-term resistance. What does that translate to in Euro Yen? Well, before we do that, here's what dollar yen looks like. And if you recall, this has been on the scalp intraday charts for the last 2 weeks. Not this week, start off the week. I'm sure we'll add it on at some point this week. But right now, you know, this is not something I'm going to scalp, guys. In fact, that dashed line you see there is the high close that we made for December, and it's continued to be the close highs for the year so far. It's right around 121.42. And again, this is, you know, classic what you see right ahead of a major central bank decision from the United States. So I didn't want you guys focused on this heading into tomorrow. I think you need to wait for this range break to give out before you get some clarity. Here's what the opening range looks like so far for the week. It's pretty tight, 121.50 on the up, basically the 121 handle on the low, And you look to play that range. If this breaks, I do look for a drop into 120.80 first, which is right around here. I don't know why my level got removed. It's a longer day at 38 too. I'm not sure why it's not there anymore. But in any event, 120.80, and then this key sort of region of support right here, 120.50, 120.47, would be a nice sort of area of support, and that will complete a basic 236 off the low. So we're looking at euro possible recovery, right, Philippe? We're looking at dollar-yen lateral, straight up range. So what does that tell us? Euro-yen could see some further upside on a pullback in dollar-yen. That's yen strength with a turnaround in the euro, and that thing could fall apart pretty quick. I think it's a risk trade, to be honest with you, just because of where the relative positioning is of the two. But let's take into account near-term price action here and see what we can ascertain. Here's the weekly open. Here's your last stretch down here from the highs that you made in February. This formation is null and void. This formation is null and void. Don't need it. I'm going to go ahead and stretch that retracement down here because we know we're going to want to highlight that low, but I do want to see if there's any confluence regions here. Basic 236 might be that same low, which would be pretty clean. Okay. Nice pivot right there. Catching these lows, catching these lows, catching these highs, and a nice confluence region. So these are sort of the levels I'd be looking at. The downside targets are what concern me. If it does turn around, again, you're heading into pretty fresh lows. So I don't have anything below the weekly low, but on a recovery type of play, 129.20, 130.13. Again, that's stretch low, and then 130.60, which all coincide with a pretty nice 35 pip ATR. Those are the levels I'd be looking at. Hey, Ben, sure. Here's sterling yen again. It says it's breaking the opening range. Can you show the levels again? Yep. Remember, the weekly opening range low is being tested now. Downside break 78.30 into 78.10, 78.12. Philippe says it's an emphatic thank you. Philippe, does that help on euro yen? Ben, you can take a picture of this chart. Feel free. Also, these levels are mapped out, Ben, for you on the intraday page. This is the second highlighted scalp on intraday. Philippe says, yes, absolutely. Ben says, okay, thanks, Mike. You're more than welcome, sir. But yeah, you got me looking at this now. You got me looking at this now. This might actually be in the event that this thing turns around. Divergence into the highs. Trigger break. Be on the lookout. Ooh, this actually might be something nice. Might be something nice. Might be something nice. Now, scalpers, for the near term, you get a topside trigger here, or it breaks the opening range low. You get a pullback. Tack on a quick retracement just to make sure if the 618 catches that swing low from Asia, you might want to kind of choke up your target ahead of the lows. And like I said, topside breach and a push through 129.20. You probably got some real nice play for the upside on a stretch here. Watch the euro dollar too, guys, because that's at resistance. So if that breaks at the same time, it gives you further validation for that topside stretch. Not bad, not bad. I'll take a quick look back at sterling yen here, heading back into the lows. All right, so guys, that takes us into the 9:30 hour. If there are no other questions, we're going to go ahead and wrap things up here. listen, prudence on the dollar is going to be the best play or the best advice I have for you heading into tomorrow's read. It's going to be very interesting to see what she has for us. We'll bring us up live, so we won't do a scalp webinar tomorrow morning. We'll open it up just ahead of Yellen, and we'll kind of take a quick look at what the scalps are doing at that point. So let's say the presser starts at 2:30. Let's say 2:15, 2 o'clock. We'll start the webinar. I'll keep you updated on SB Squawk, obviously, when we lock in that time. Again, quick reminder that the midweek strategy webinar will be on Thursday this week following the the FOMC print tomorrow. And hopefully Yellen gives us some fireworks. I'm sure she will. The cautionary or the focus will be on the inflation outlook from not only the comments she says during the presser, but also the quarterly projections, which we will go over in real time. Guys, best of luck trading, and we will see you tomorrow morning. Cheers.